Welcome back to our Diwali special. Once again, here's wishing all our viewers and their families a very, very happy Diwali. One of the best ones that we've had in the recent past. We have been in discussion with Manish Chokhani and Ramdev Agarwal. Ramdev ji, I wanted to ask, get straight to the point. You know, what are the sectors to watch from here on? Some of the beaten down sectors are coming back into action purely because of the valuation headroom.
Yes,
so you tell me, which ones do you like?
Yeah, so you can do your numbers, but the most headed sectors and which are of some significance is, of course, one full group is that PSU. Under PSU, what of 45, 50 companies are there. That has been kind of a big disappointment. And there again, you know, everything is not flying. To some extent, I think defense has been their monopoly. So defenses, some of the companies are very asset light, very high ROE, consistent companies. At times, cash flows are challenged because government's fiscal deficit at times extends to their balance sheet.
But those stocks have run up a lot
Yeah,
as well, right?
But I think that's the theme now, in the sense that maybe it is popular right now. But other than that, say, a lot of large companies are there. They are also trading at single-digit P multiples. Coal India, ONGC, Oil India, HP, BP. I mean, entire energy basket. And you know what world is going through. So what will happen, I don't know. But these are all hated companies.
ESG and all is out of the window now. I mean,
Coal India and ITC were big performers last year.
Yeah, ITC has now come back, but that's the private sector. So that's one segment. I mean, I think you have to find some large companies which are not done well because the wind is going from one direction to other, and market is trying to find within financials what are the hated ones. So hated ones are PSU banks. So they can be a good, maybe not a very long-term investing, but as a trade, you know, you buy it less than one book. Like most of the banks are available 0.7, 0.8 books, and except SBI. SBI is a little premium. So leader of the pack is SBI. So I think, so that's a very large, so you like financials, and in that not so favored is the PSU banks. So like that, there are opportunities. Your real estate, after I think 12, 13 years, 14 years, they are coming out of the slumber. And the last 12 months only it has just picked up. Stocks have picked up a lot. But still, like say DLF, if you call it as a very large this thing. So I remember in 2007-8, it had gone to, after listing, it had gone to about 1100-1200 rupees. Even with everything, all clean up, and still it are about 350-400 types. So what I'm saying is that sector still has that runway, and it is just coming out of slumber.
But in PSU banks, I mean, let's be honest, right? Last decade, PSU banks have done nothing for investors. So are you saying that this is just a trading
value will keep
bad
migrating.
risk?
Yeah, it's just a trading bet. Value is migrating. I mean, at one point of time, 2 years back, 120% of the profit was coming from private sector banks. And so I still think that of the profit pool, largest profit pool is in the total corporate profits of about 9 lakh crores. Largest profit pool is from the financials, banking and financials, and of that, even larger portion is from the private sector banks. So that shift of the profit share within the large profit pool is going to keep happening in favor of. So if you can find a private sector bank reasonably well run, growing at rapid pace, you know, and little expensive, that is a much better investment than buying very cheap bank but gone nowhere in 10-year basis.
Manish, you've liked media as a space for a long time.
As well. So I'll just complete the financial one, and I don't normally talk stocks, but I'm compelled because the best bank in India by far has been HDFC Bank, and it's done nothing for 3 years. And even now it's like, oh, how will they grow? How will they get deposits? I mean, with a 5-6% share of a banking sector, where the economy is still going to triple over the next decade, where your share of financial savings is going to go up. If you're going to tell me that the largest player here doesn't know what to do and how to grow, it's a bit of a kind of no-brainer. And because there will be forced selling, because their MSCI will exclude them and Nifty might exclude them, and it's fabulous. It's an opportunity which I hope everyone in India takes whenever it happens, if it happens.
Right.
I'm not hoping it does, but you know, that's something which you can speak on Diwali.
Absolutely.
It's a national icon, and one should think of it that way. But coming to your media point also, I think we've spoken a lot in the past about this OTT and how overhyped it was. And now when the leader of the pack, Netflix abroad, has also put in, you know, the hands on the floor and said we cannot survive without advertising, and eventually it's another medium of broadcasting into people's homes. And in India, we had taken the wrong analogy. We are trying to produce Game of Thrones and sell it to the poorest guy in India without collecting any money. So that model is broken. Media is, I think, even more hated than PSUs. And there is a change which is, already visible over there. 2-3 listed companies, you can figure out which one. So I think there is serious cash flows, good ROI, improving management, improving payouts. Things will change over there. The third thing I'll point out, since you asked new sectors, is when you look across the world, and I go back to this globalizing theme where near-shoring, friend-shoring are the new themes. You go to Europe, their whole chemical industry is shut down because they can't cope with the energy costs. And chemicals was basically Europe and China. Everything had migrated. Textiles had migrated away. If you don't want to buy from China and you cannot produce in Europe, and in any sector, when you want volume and you want skill, you can go for something to Vietnam, you can go for something to Philippines, but when you want volume, you come to India, whether it's for IT, whether it's for chemicals, and that skilled manpower exists over here. So, and the profit pool, as he said, of that sector is very tiny today. It's probably $1 billion or $2 billion. Can these guys make 10x of this? And who is the new person who comes out? Like if you had told us 20 years ago, Petchem will thrive in India, one Reliance comes out and takes the opportunity. That opportunity exists in a lot of manufacturing spaces over here. So that's where one would look around. Manufacturing is also hated in a sense in India. But I think there's
slowly getting some love though. Slowly, just about starting.
Let's hope. Because they deserve, all these manufacturing guys deserve Padma Shris for going out to work, facing the hostile environment. They should all be given awards every year.
Actually, a manufacturer was recently telling me this is one of the toughest times to keep a business going, for business to survive in India. I don't know what's happening globally. But on that very optimistic note, thanks a lot for joining in and wishing both of you wealth, happiness, prosperity, but most importantly health, because we've all learned that that's all you can wish for, right? Well, with that, it is curtains down on this somewhat special. Thanks a lot for watching. Keep it with CNBC TV 18.